Hello and welcome to another update video about Bitcoin. Yeah, for Bitcoin, the retracement here to the downside today was quite strong, and yesterday as well. The way this happened, we need to say very clearly that my primary expectation gets with that move down more and more likely, which is a lower low. Yeah, I've been stating that throughout the last few weeks all the time. Still get some comments that said my bullish count was wrong and that I shouldn't have been so bullish on Bitcoin. To be honest, I always said that as long as we are below 23.3k, my primary expectation has to be that we are still going to make a lower low. I was simply tracking the potential of a breakout, and I think this is only responsible given that to the downside, Bitcoin has fulfilled all requirements to complete this correction. And therefore, it is very important to track potential breakout scenarios so that we know early enough when Bitcoin does something that is worth watching. So, however, I told you, as long as we don't break above this structural resistance, the downside scenario will remain more likely. And this expectation so far is working out. Is it what I want? Not necessarily. I would like to see Bitcoin to go up. But of course, it doesn't matter what I want. Yeah, it is what is more likely, and more likely below 23.3k is clearly still another lower low. And yeah, despite all the potential bullish options that we had and that I was tracking here over the last few weeks, they have often been invalidated. Yeah, they had to be readjusted, and especially now with this move down, which, to be honest, is looking more impulsive than this move up. In my opinion, this has become much less likely the bullish breakout scenario. Yeah, and it is still possible. I have to tell you that very clearly as well. As long as we are above 18.6k, above that purple wave 2, we can still look at, and it's still possible for Bitcoin to make or to generate a breakout from here. So what I mean is this underlying structure which has been generated here and created since the 18th of June, it would still allow a breakout. If we make a lower low below 18.6k, even then, yeah, due to the structure that has emerged here with those two highs, it would be possible. And I'm going to tell you that scenario as well, because a few questions will come up. So it could technically be that from the high here, yeah, we would need to put the wave 1 here. It would be possible to count this as a larger wave A, this here as a wave B, an overshooting wave B, and that we would make a wave C, possibly below that wave A. And from here we could then still count a 1 and a 2. Now, is this likely? For me, not really. The reason for that is that I have problems with putting that wave 1 in purple here to the high. It doesn't look right in terms of the relationships of the waves to each other. Yeah, the proportions aren't right. Therefore, I've decided to keep the wave 1 here, count it as an A, B, C with an overshooting wave B, and then you can only come to the conclusion this was a 1 and a 2 and another 1 and a 2 in a bullish scenario. But again, the amount or the number of bullish scenarios that have been invalidated here over the last couple of weeks, including all these overlaps, yeah, and the way the price is coming down here, especially the price action of the last few days, has made the bullish scenario much less likely. So again, it's technically still possible, but I'm increasingly doubtful about this. Yeah, there was a realistic chance. To be honest, there still is a realistic chance, but where I had, and I think I mentioned it before, where I gave the bullish scenario maybe what did I say, a 45%, yeah, where the bearish was a 65% probability, I would probably adjust it now to maybe 25 to 30% for the bulls, and then a 70 to 75% for the bears, okay? Or maybe give it, no, that pretty much is probably what I would go with. So technically still possible, but this just makes it less likely that this still is the bullish scenario, especially, and that is one main reason, that this move up looks more corrective compared to this move down, and that is not a good sign for the bulls. Therefore, let's take a closer look at the bearish scenario. where I also showed you the detailed wave count in the last few days, where we would assume that here wave 3 finished here on the 18th of June. We are still, or no, we have probably completed wave 4 here at the peak at 22,500 in a WXY pattern. And the suggestion or the idea would be, due to the impulsive nature of this move down, that we are moving down here already in a 1-2, that this long move down, yeah, this is such a long move down is always an indication that we are in a wave 3, that this would be a wave 3. Now, and I posted that to the Telegram members earlier on the Telegram channel, I would expect a move up in a wave 4 here into the region between 20.1k and 20.7k. And when will this move get basically very, very likely? Well, above the high here of 20,000 basically. At above 20,000, I think we're going to see the move into this green range, out of which in this scenario, I would expect another move down in a wave 5 to finish off wave 3. Yeah, and that wave 3, to be honest, that wave 5 of the wave 3, that would take us here out of the bear flag. Okay, and then you might see a wave 4 to retest the flag from below, and then a wave 5 to the downside. And that could already be enough to make a lower low here, and we might even with that wave 5 then touch the 78.6% fib level, which is at 16.9k. So this is a very likely possibility. Now, if you look at this green target area here, this is obviously the target for the wave 4. The target for the wave 4 usually lies in the range between 20,000, between the 23.6% level and the 50% fib retracement. If we go significantly above 20,740, or if we go above the box, we retest it from above, and you see a green candle, then I would go with another scenario, yeah, so that you know what is the most likely scenario if that happens. Then I would not call this a WXY pattern. Then I would call it an extended one, a WXYXZ pattern. So it is basically an even longer correction where we could move even longer in this flag and then have as a price target again here the peak of the channel. Yeah. From here then we would start that impulsive move down that I have sketched out. So the question is now, are we already in that impulsive move down now, or do we delay it by one move up? So this is key. This is important. Yeah. And it might depend to a certain degree on the CPI numbers that will be released tomorrow. Personally, I expect something above 8.7, maybe 8.8%. Yeah, anything above that. I don't at the moment expect that the inflation numbers peaked already. That has to do with the statement of the White House that announced that probably the inflation numbers will be very high. Okay, so last time they announced that we had the 8.6%. So that was also very, very high. So we'll see. And that could then lead to another sell-off here. We'll see how the market reacts to it. Obviously, I don't know how the inflation numbers will be. I don't know exactly what's already priced in. But I can tell you here price targets for certain scenarios. And, you know, the bullish one, again, just to summarize, the bullish scenario is still possible. But we would now here need to see a move to the upside. And I mean, we've touched the 78.6% fib level. That was, by the way, one of the targets I gave you. We could still go lower here again, yeah, but how likely is it? In this scenario, again, it has reduced probabilities. And especially if you go once more lower now to the 19.15k level, then you're dropping out of that range, out of that flag. And then again, you've broken the flag. So it's again, would probably put more weight on the bearish scenario even more. So yeah, and I mean, right decision, I have to say, not to make the bullish scenario primary, because we never broke that level, okay? And we never even broke that resistance level here substantially. Yeah, we peaked above it briefly, that was it. Okay, so always bear that in mind. What I always say, we need to see the evidence in the Elliott Waves patterns. we need to see volume, and we need to see structural price levels to be broken in order to get out of certain selling areas, and we haven't seen that. Yeah. And therefore here, so bullish possible, but very unlikely. Yeah, it has become much less likely. Now I would go with primarily this one here, WXY finished, impulse down, yeah, where we move up now in a wave 4 area, then come down in a 5 to finish off this wave 3 in yellow, then wave 4 up and a wave 5 down, making a lower low below 17.5K. Should we go above 20.7K, I would go with this WXY XZ pattern, an even longer correction, yeah, from where afterwards we then would start the impulse. So actually for me, primary expectation remains here. The bearish obviously has even become more likely. Primary expectation within the bearish alternatives, yeah, that we have is this one. But again, if we break above that level, then you know what is expected. So I wouldn't even go bullish, to be honest. If we break above that level, I would only go bullish, especially after this strong price move that we had. I would again only consider more closely the bullish scenario if we break above the 23.3K level. Okay, so that remains. The thing is, now that we have made this move down, it has sort of messed up all of it. And again, it has invalidated one of the likely bullish scenarios where we had here a wave, I think a wave 3 to the upside. We were waiting for a wave 4 down and a wave 5 up, but we came down too far, again messed up that bullish scenario. So again, yeah, just puts more weight on the bearish one again. Good, and that's my view on Bitcoin. So hopefully you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, please check out the channel membership. Thanks a lot for watching. Bye-bye.